Hello and welcome to the Mutual Fund Show. A change in the Foreign Exchange Management Act guidelines have left certain mutual funds in a tough spot. The new rules, which were notified in October, affects foreign-owned or controlled mutual funds operating in the country. The guidelines categorize mutual funds which invest over 50% in equity as an investment vehicle. Essentially, the domestic retail money managed by these funds will now be subject to FDI regulations, including sectoral caps. The funds have obviously written to SEBI seeking clarifications. I think AMFI as a body has done that too. And to get this FEMA provision amended suitably. To discuss the implications, nevertheless, of this and the way forward, we are now joined by Swarup Mohanty, CEO of Mirae Global Investment India, and Nikhil Naik, Chief Growth Officer at Naik. Gentlemen, both of you, thank you so much for taking the time out and joining us on the Mutual Fund Show. Now, pleasure is always ours. Swarup, let's start off with this because you would be one of the funds that come under the crosshairs, so to say.
Correct.
What do you make of this? A bolt out of the blue, as one of the earlier guests had told us in the morning.
It came as a surprise because, as you rightly pointed out, the mutual funds in India don't differentiate between a foreign fund and a non-foreign fund because we are all registered under the Trust Act. As you rightly pointed out, I think the regulators are speaking. AMFI is discussing with the regulator to get this corrected. It's an anomaly, and we do believe that it should be corrected very soon because the discussion is on, and as we speak, there's a fair amount of back and forth between both sides. I think the AMCs will rightfully put out their own side of the story. And when you look at it at a very, very fundamental level, we might be foreign owned, but the money we manage in India are completely Indian. The underlying asset is Indian. So this is a small rectification which needs to be done. Our inclusion in this amendment on October 16th got us into the entire gamut of things. So we are trying to talk it out. That's the whole thing.
Okay, and we'll come to the spirit of this as well in moments from now. But first, the law, a legal angle, and Payaswini, who covers all things legal at BloombergQuint, said that from the conversations with the legal people, there is no way around it unless the powers to be figure out that there is a bit of an interpretation / language misrepresentation or wrongful putting out that has happened, and that gets corrected at source. Now, you would have known about what is it that AMFI or AMCs are trying to do. Can you give us some color here?
See, fundamentally a law is a law and there is no interpretation of the law. It is black and white. Okay, if that is the law, then that is the law. There are two types of people, the lawmaker, the law follower, and we would become the law follower. That ends the whole thing there. When you look at it at the base level, and this is the discussion that AMFI is having with the regulators or the rightful regulators, in the sense that in case of mutual funds, I mean, if we were managing some foreign money, it could be subject to that. But the essential schemes that are under consideration here are essentially Indian money. And unless, and this is primarily regarding say the money which is from abroad, right? If they come and tell us something about our own capital, which is which has gotten from our parents or our sponsors, that's a separate issue. But this being subject to the underlying Indian schemes is the anomaly which the mutual funds are pointing out.
Just wondering, and I would want Nikhil's view on this as well, but Swarup, just a follow-up there. There are AMCs who are now getting in money from global funds or otherwise to be invested in India. That is not classified. That is anyways classified as foreign owned and foreign entity. That doesn't come under this conversation at all, any which was, right?
So that would be a separate end. If some laws come on that would be under the purview, is my personal opinion. But from the discussion that is happening on the segment that is being discussed, is completely Indian on assets.
Yeah. What's your view out here, Nikhil? You would have spoken to, besides Swarup, some other AMC managers as well. What is it that they have to say about this, and what's your own personal view?
No, I think they're trying to talk it out, and I'm sure there'll be a way around it. And when it comes to investors, I think investors' perspective, I think if you're investing in a mutual fund anyways, the money is well diversified. They ensure from the risk point of view, the money, there are caps, internal caps, there are internal limitations that they set out. And I think to that extent, if I was to imagine, I think most of the mutual funds would anyways comply from a risk point of view, from an investment discipline point of view. But I think in the spirit, like you said, it's Indian money, it's my money which is getting again invested. So I don't think there should be a cap of indirectly I'm owning a particular Indian company and an Indian investor is owning an Indian company. So I don't think there should be a cap to this, and this should get sorted in some time. So
yeah, I mean, my personal views, I know there's a lot of fear, and we put it out on Twitter as well early in the morning, that for people to believe that there will be a large market sell-off as a result of something like this is, I think, a bit overstretched. But let me get Swarup's view out here. Swarup, in the event that this does go through, I mean, let's assume that the chances of this are negligible because some clarifications could come about. Yeah. But never say never, right? So in the event that this goes through as it seems or as it is worded right now, what are the implications?
See, implications are two parts. One, on the present holding, as Nikhil rightly pointed out, they are diversified in nature, most of the fund holdings. And then broadly, when we did a dip test, we were waiting for some reports from our custodian on the actual impact. We are on our universe of, say, 96, 98 stocks underlying, we would be affected by one stock. That is the underlying. And even if there is a so-called sell-off that would happen, it would be a percentage or two of our entire portfolio, which is, from a sell-off perspective, would be pretty negligible. So if somebody is anticipating a huge sell-off and hence some major impact on the market at the current level, the answer is no. Right, and all of us put together, if you look at the broad foreign side of the holding, this concept of it being diversified hold good for all of us. Right. The other part is the new buy. That is where the big thing now, there is a new fund which comes in because the cap is there, he won't be able to, he or she would not be allowed to buy, which I don't think is fair at the end of the day. I mean, if for the same fund, if a new category or a new fund were to be launched, if the overall cap is met in that, say, the financials or the banks, the new fund will not be allowed to buy, is my interpretation of whole thing, and that's not level playing field.
Yeah, okay, I have a follow-up question and a slightly very basic question, but either of you feel free to answer. Let's assume that there was a stock, and we can very easily name these 2-3 names, but let's assume that there is a stock, a bank A, wherein the foreign shareholding, as of whatever time we know, was already at the threshold level.
Yeah.
And now this new interpretation comes in, and this change in guideline, and therefore, let's assume that the worst case scenario and its classification as foreign holding. So therefore, the holding naturally goes above the limit that was anyways established, because without say a Mirae or a HDFC or some of the others being classified as foreign holders, the holding was anyway 74%.
Correct.
Now with that classification happening, I'm guessing that the overall holding goes up above 74%. What happens then? Does the normal natural reduction come in, and who reduces?
Exactly the point. Who reduces? That is the clarification we will have to seek, and that's a clarification which will have to. It's a very complicated thing. Now, suppose just mathematically, if it is 74 and the holding is 80. That 6% overholding has to be spread amongst all the holders. Who gets what, right? So it's too early to sort of get into that is the submission. We will wait for this discussion to unfold, and I do believe the discussion is pretty intense, and it will reach a definitely an amicable solution very soon is my opinion.
It should, and one hopes that it does. Nikhil, just wondering though, I mean, from a somebody who's not getting impacted directly perspective, do you think that it's strange that we're talking about a situation which in all probability will not happen, but because it's so forced to ask about this, that if it were to happen as well, it will not be applicable in certain cases wherein funds already have the holding on a retrospective basis, but maybe on a prospective basis, that here on the holding for any entity to be determined takes into account the 6 or 7 AMCs which have foreign ownership, and sabka mila ke, if the shareholding is above 74 or around that level, then you don't go out and buy it. It won't be that if the total holding by virtue of this change of definition goes above 74, then people accordingly have to sell it. Do you think that could be another logical thing? It's hypothetical, I know, but it's just addressing all aspects of the issue.
Yeah, I think, see, the big sell-off or these things, we are in a era of skepticism. In a bull run, like John Templeton says, that we are in the bull markets are born on pessimism, start moving on in skepticism. So whenever there is a skepticism, any news is a bad news. And we are just trying to look at different news. I think it's going to be way too complicated than, like Swarup said, it's going to be way too complicated for who will reduce the allocation, which are the fund houses who have to reduce allocation. I think it will ultimately boil down to what is their allocation at the fund level, and they'll have to then sell it off whether or not that 74% gets breached or not. I think that will be the respective AMC's lookout. To my mind, to a large extent, most of the fund houses would have adhered to their risk because of their risk caps. They would not really. There won't be much of a sell-off. So.
But just to take this to a conclusion or any conclusive end, see that when a law is made, law is made uniformly for everybody. Right, and in this case, there is a slight anomaly in the sense that within that same bucket, you are differentiating two different types on ownership. Right, if it were on holding, I buy the point, right? But on the ownership, we are all registered at the same act, right? So...
And you're managing the same money.
Yes,
the Indian
yes, it's the
investor's money.
same investor who's invested on all sides, right? And if you look at the industry also, the progression today, we can very happily say that 54% of our total AUM is held by individual investors, which was not so 10, 15 years ago.
Yes, that's changed.
And the rightful penetration of the industry is happening to the right consumer, right? So the same Indian individual investor is spread across all funds. So keeping that spirit of uniformity of law intact, I do see a logical conclusion of this very soon.
Yeah, viewers, keep in mind, if I can just try and simplify it, according to what I understand, if I have 5,000 rupees each, 5,000 managed by Swarup Mohanty's Mirae and 5,000 managed by somebody else, let's say a local fund which doesn't have foreign ownership, then that both those individually 5,000 rupees are now treated differently, whereas it is my Indian residents' own money which is going into these funds. So that's the anomaly. Just one last question on this follow-up, Swarup. How does this go ahead now? Because I'll tell you what will happen is that there'll be 5 different news flashes talking about 5 different supposed powers to be who are telling that this is an anomaly or this is not an anomaly. So what's the logical route? I mean, what happens? Does AMFI or do AMCs approach SEBI? Does SEBI go to Reserve Bank? Reserve Bank goes to FinMin? Do you have any idea at this point of time of how does this reach a logical conclusion?
Yes, AMFI is our representative body. AMFI is talking to SEBI. My humble request to everybody is, when the whole thing unfolds, that is the right time to look at it in totality. At this moment, it is just conjecturing.
Correct.
This can happen or this cannot happen. The rule of the land is very strong, especially in the financial services. We've seen that there is no ambiguity about the laws that are formed, and when a certain law is formed, it is with a certain background. It just does not pop up. I'm sure that when these two bodies, and these are pretty pedigreed bodies, when they finally represent to RBI, the logical conclusion will be made. My humble request to everybody is that wait for that day, and then when the implications come out, then make your logical conclusions.
Okay, sounds good. One follow-up now. I mean, we've discussed this issue in detail. What this does is, and a lot of people on the market have been talking about this, that just when FinMin is trying to show that it is in sync with the market mood and trying to care for what the investors think, this comes as a bolt out of the blue. Now my question is, retail mutual fund investors have been, for whatever reason, been hit with a lot of individual issues in the last 12 to 18 odd months, right? ILFS happened and the debt schemes had some issues, then mutual funds and the reclassification, and therefore a lot of mid-cap, small-cap schemes haven't given returns. A lot of retail investors are unhappy. What's that mood right now, and what should investors do in such a scenario? Nikhil, if I can start off with you on that.
I think the mood is on the street is not great for sure, because this is known as recency bias. Whatever I've got in last 1 or 2 years, I assume that this will last for forever. So in 2017, investors thought that they got decent returns, damn good returns from the funds. So they thought this will continue, the party will continue. Similarly, the past 1 or 2 returns haven't been great. Like you said, there have been multiple news which have been hit. I remember investors forwarding me messages about ILFS and some of the debt funds, and then I asked them how much have we invested. So they said, no, we've not invested. But the overall mood, the overall noise was so much that everybody was getting panicked. I think to my, I guess these are the times, whenever perceived risk is high, actual risk is low. And whenever perceived risk is low, the actual risk is very high. We are in the situation where the perceived risk looks very, very high. These things, like Swarup said, that this is an aberration, this has just come out of nowhere, but then we see people talking about will there be a sell-off or not. So I think these are the times when the investors should actually shut the doors look inside his portfolio and say.
You must be telling your clients the same thing. Are they buying that right now, or are they saying that let me take the money off the table or something like that?
See, in extreme times, it is very difficult to remain quiet and composed. Very, very difficult. Whether it is bull run or whether it is times like these. And a sustained painful period could also lead investors to take extreme measures of getting out or so. But luckily, this year, it's not been that bad. I mean, we've seen 2008, we've seen 2013, where best of the investors, best of the long-term investors sold off everything and went out of the markets. But I think these are the times where the investors are not not as panicked as they were in 2013 also.
Yeah, Swarup, just last word on this. It's it's just a very strange feeling that we talk about how jittery investors are when the Sensex is trading at record highs. It doesn't usually happen, right? Yeah. Investors jittery when everything is down, their portfolios are bleeding, but not that the index is trading at record highs. This time around, it's just very different. What happens, because I remember you and some of, if I correctly remember, you and some of your peers have now been for the last 6 months saying that it might be a great idea to get into the broader end of the spectrum funds. That's the pocket which has bled and continues to bleed.
Correct.
What's the messaging that you are giving out to investors?
See, our messaging has been that same consistent messaging of not follow past returns too much. I mean, my observation of investing over the last whatever years I've been in the market is the weightage given to investing based on past returns is extremely high. And we'd seen that in 16-17 when the money chased mid-cap funds. We're seeing that now when a lot of money is chasing small-cap funds. You have to change that to whether you need that fund or not. And that's where the advisors come in. The concept of asset allocation or knowing why you are investing is primary. You might, I always say this, that I want a return, my return expectation is 11 to 12%. With that return expectation, I don't need a small-cap fund. Right? They can do very well. But does it meet my portfolio needs? No, it does not. There is nothing wrong in not being in them. I mean, they're a great category, right? But my return expectation, I'm very clear of what I need. Once you know what you need, then allocating becomes easier. Half the times these things come up is because you are chasing a return, and even if you are chasing a return, my submission is put a return expectation. Let's put that I need 12, like I'm saying I need 11 to 12%, which is backed on a certain quantum of money I want after a certain period of it. Put some mathematics, cut out emotions. The more emotions you cut out, the more you'll realize that India is a fantastic country to be in. And trust me, the next 5-10 years globally, and this is a Mirae asset view also, that belongs to India. I mean, very few countries will match up to what will happen to the underlying country, that is this country. So the economy is there. There will be some slowdowns, and during those slowdowns or during those volatile times, rise the opportunity. We are slowly getting into a great zone of stock picking, and choose your good managers, choose your good advisors, and build a plan and cut out emotions and noise. If you do that, next 10 years you will make money in India.
Well, as a lot of viewers will say after listening to this, aapke muh mein ghee shakkar. Let's hope that happens.
Times to buy the broader market.
Yeah, and I think both of you are echoing that sentiment. Thank you so much, gentlemen, for joining me today. Really appreciate your time and for speaking about this topic which has just come out of the blue. Really appreciate that.
Thank you so much, Neeraj, for having us.
Pleasure is ours, and viewers, thanks for tuning into this leg of the Mutual Fund Show.